While we celebrated our freedoms over the weekend, many investors were ready to celebrate the June jobs report as well. Inside the better-than-expected employment numbers in this week's edition of the Fastest 4 Minutes in Finance. Hello once again, I'm Scott Inman. The U.S. Bureau of Labor Statistics June employment report released last Friday revealed that the domestic economy added 850,000 jobs for the month, beating Bloomberg surveyed economists' median forecast for a gain of 720,000. So the question is this a celebration worthy of a cannon burst or just a snap pop? Well, believe it or not, despite the huge additions on the payroll, the unemployment rate actually rose 0.1%. And the labor force participation rate also didn't budge. It's still at 61.6%. So it was a bit of a mixed bag, and we still have a long way to go to get back to pre-COVID employment levels, especially in sectors like leisure and hospitality. Anyone who's gone out to eat or gone to an entertainment venue or maybe even stayed at a hotel has likely noticed shorthanded service. Well, take a look at this chart from LPL Research. The largest share of the 6.8 million jobs we lost since the beginning of the pandemic happened in this sector. The sector gained 343,000 jobs in June, but this chart shows the change in payrolls starting August 2019, so almost 2 years. And you can see here we're only a little more than halfway back to where we were when the pandemic began. We've talked about before that the pandemic-related federal unemployment checks are keeping many of these workers at home. But those payments are ending in many states like Arkansas, where governors have opted out of them, and the payments are set to expire in September nationwide, so that should spur the leisure and hospitality payrolls in the fall. The bigger questions are, how fast do we get back to pre-pandemic employment levels, and how will that affect inflation? Because we do know that employers, especially in leisure and hospitality, are paying higher wages and even offering signing bonuses to get people to work. If that's a permanent change, it could put inflationary pressures on prices. Now, meantime, markets were down to begin the holiday-shortened week of trading, but it could be a good time for some perspective. Prior to the big drop this week, the S&P 500 index had been up for 7 days in a row. It had made 7 new all-time highs during that run. The index has closed higher for 5 consecutive months and for 5 consecutive quarters. Always a good reminder that this market is still on a sharp upward trend. We shouldn't let a little volatility spook us. Thanks for watching.